What up, guys? It's July 6th, and we're going to go over these markets and everything that's been going on in these last few days in the stock market. Before we get started, of course, I hope that everybody had a safe and enjoyable 4th of July weekend. I hope everybody's good. I hope that you lit up your portfolio and not the sky, okay? In my house, we have a zero fireworks policy because I do not like burning money, and I feel that fireworks are like burning money, okay? And I'd rather light up my portfolio than the sky, like I said, okay? So before we get to everything, please hit that like button and hit subscribe. Hopefully you learned something from this and we have some fun in the meantime, all right? Let's get to it, all right? So here we have today's action. We have the Dow Jones down up 0.23%, S&P 0.36, and NASDAQ 0.35 higher, okay? I think that this is good because the markets have been really sustaining for the last, week or so, have been sustaining a good level. We're not seeing these massive sell-offs here because I think stocks are very much oversold at this point. We're looking at the 10-year bond yield, which has gone down significantly since its highs, which is a positive for stocks, and oil falling under 100 is another good sign for stocks, okay, and allows specifically tech stocks to do a little bit better than they have before, okay? Now, we're focused on the Federal Reserve. As usual, we've talked about this before. That's just the main focus as to what they're going to do and how they're going to react to eco data and make decisions based on what eco data shows. Here, Fed sees more restrictive policy as likely if inflation fails to come down, okay? But we're going to talk about inflation and where we are with inflation in specific sectors, specific sides of inflation, and whether we're winning that fight or not, whether the trend is positive or negative. So we know what to do and we know what we should be doing in these markets, okay? Now, the talk out there is about recession and economic slowdown. Are we in a recession? Are we going to be in a recession in 2023? Okay, when is the recession coming? Okay, and I think that we're really in it. The first thing, of course, that we need to know is what is a recession, okay? And of course, it's two or more consecutive quarters of negative GDP growth. The first quarter of 2022 was already a negative growth quarter. If we have negative growth again in the second quarter, that would be already considered a recession. I think that will be the case, and it's a mild recession at best, okay? We have bear markets, okay, in the past, which we've had 3 of them since 2000. This is the reason that I'm not so afraid of this recession, okay? We have March of 2000, that's the dot-com bubble, lasted 30 months, and the S&P went down almost 50% in the year 2000. We have October of 2007. This is, of course, the housing crash, the Great Recession, which lasted about 17 months. Not a long time, okay? It's actually a long time for you to sit there and be buying stocks this whole time, and the S&P changed 56%. From peak to trough, negative 56%. I should consider that, I'm telling you guys that all these numbers are negative, of course, okay? And then February 19, 2020, that's the outbreak, that's the lockdowns, Rona, 1.1 month, right? And that changed 33%. That was a 33% change. That was February, March of 2020, which we were buying stocks very heavily back in those times, and I remember them like they were yesterday. I kind of feel like the same way today, in which we should be actively buying stocks because we have an S&P change of about maybe 20 to 25% at the moment. We're not there yet, but at the same time, we're not in this crisis mode. We're in a self-inflicted economic slowdown because of the Federal Reserve, right? They're imposing higher rates in order to fight inflation, okay? Let's talk about a little bit more about how the fight against inflation is going. And of course, we're talking about here different types of inflation. I want to bring your attention to these topics here, okay? So retail inflation, all right? Retail inflation is whenever you go to a store, milk costs more, right? Groceries cost more, clothing costs more, electronics, you name it, retail. You guys know what I'm talking about, okay? Right now, the trend is positive, meaning that the fight against retail inflation is being won at the moment because we have excess inventory. We've talked about this before. Target, Walmart, and other stores like Bed Bath & Beyond was another one that just reported, and they talked about excess inventory, okay? Excess inventory, higher supply, lower demand means lower prices, okay? So this is a positive trend in the fight against overall inflation. That is good. We have then commodities inflation. Okay, this is another positive trend. Price of metals. Okay, price of grains, price of soybeans, natural gas, even pretty good drop there. Lumber, aluminum, copper, all have majorly crashed. I mean, if you look at lumber, it's like a major crash in these commodities. If you're betting against those, good for you because you made a lot of money. If you're betting for those, you lost big time on these commodities, okay, and the price of these commodities. So that is positive. That's a positive driver that brings down inflation. It's all deflationary, okay? Wage inflation, that's the negative trend that we're looking at because we have more jobs than people. That means that people are more willing to ask for higher wages. They can move to better jobs and make more money. I know it sounds like, man, like that's a good thing, right? But for inflation, it's not a good thing because the more money people make, the more money that's out there in the global supply, in the jobs market, which means more supply of money, things cost more. So there's more jobs than people. The pace of automation is still very slow, and the job market is pretty robust. I think that there was a CNBC article that I posted today on Instagram that said 2-to-1 as far as the availability of jobs against. Let me see here. It was. Yeah, job openings fell in May, but still outnumber the available workers by almost 2-to-1. I mean, that's crazy. I don't think I've seen that ever in my lifetime. So yeah, robust job market is right. All right, and moving on to the housing market. If you guys are anywhere near housing, you'll be able to see that housing is coming down. If you live in your neighborhood, or if you look around your neighborhood, you've seen probably for sale signs go up. I've seen it around my neighborhood and around my family's neighborhoods, for sale signs going up a lot more than what we're used to in this last couple of years. And of course, more houses in the market means more supply, less demand, prices must come down, right? So the trend, of course, is increasing inventories. The lowest home sales in decades have been reported lately in these last couple of months, because of these increasing mortgage rates. There's people that are completely unwilling to pay a 5 to 6% mortgage rate. I've talked to plenty of those people that are looking for homes and they're just not willing to pay that interest rate. And for that to happen, new home builders are going to have to keep adding upgrades for free or lower the price of homes. The adding upgrades for free, we're talking like, here, we'll do your kitchen and the best appliances that we can find, and your driveway, we'll put pave stones or whatever, pavers in your driveway. All kinds of upgrades to try to incentivize people to do it. But still, 6% interest rate on these, even with free upgrades, it's still a steep price to ask somebody to pay for a new home, even, or any home for that matter, okay? And of course, the homes, like I said, yeah, high in the face of high interest rates, these home prices have to come down. And my favorite point, that is the most positive point that I take away from this market, is the decrease in speculation, or the devastation of the speculators in the last year or two, okay? And we'll start talking about the IPO window. If you guys have been in the market for, more than a year, you will notice that there was IPO after IPO after IPO, DPOs, the SPACs, right? The SPAC attacks. These were supply of stock hitting the market because new companies will be out there listing themselves in all kinds of different ways. These nefarious SPACs, which increase the supply of stock out there in the market and makes it so people that want to take new positions have to sell their existing positions to take new positions in these new companies that just become public. More companies, less people, less amount of people to actually buy them out there is bad for the markets. But that IPO window's been shut. That is very positive for the market, okay? And then number 2 here, NFTs and cryptos, the to the moon mentality. Remember those guys? To the moon, where are you at? I don't hear you, okay? So that mentality is toast. NFTs are worthless, just like we thought, just like I thought they were. And cryptos have lost like 70% of their value. Ethereum, Bitcoin, they're pretty much the house of pain at the moment. So that is good. I think that is healthy for the markets because that money that flows out of there can flow into stocks, okay? And then lastly here, the Wall Street Bets crowd, they got secluded into the island of AMC and GameStop, and they stopped that whole stocks only go up mentality. And in these two stocks, GameStop and AMC, they can just sit there and fight each other all day long. They don't realize that they're just fighting between themselves for scraps at the moment. Okay, so that's essentially the rundown on what's going on with inflation. I think that the fight against inflation is trending positively. Could that change in the future? Maybe, maybe not. But at the same time, who knows what's going to happen. But I do think the trend is positive, which would allow for a softer Federal Reserve to not raise rates so much, or to actually tone back and maybe even lower rates in 2023 and allow that multiple expansion that we would see from lower rates. Now, moving on, what's my focus? What am I doing in this market? And I wanted to put this together for you guys to show you what I've been doing in this market. And it's not buying Palantir that much. I think my Palantir position is pretty much almost already set. I'm pretty happy with it. The move lately has been pretty nice. But we're beefing up the semis, guys. We're talking about the semiconductor stocks. We're beefing these guys up. This is our semiconductor exposure. We have AMD for high-performance computing. We have some auto there. We have Xilinx for telco. And it has a forward PE today of 17. I don't think I recall ever seeing AMD at a forward PE of 17. And that I think is fantastic. We keep adding to our position slowly and lowering our cost basis, because it's finally gone under our cost basis of about $82.50, and we keep trying to lower that cost basis. Right now it's about $75 a share for AMD. We keep adding whenever we have the opportunity to do it. And then NXP, that's our auto semiconductor exposure, a forward P of 10, dirt cheap for the amount of growth these guys have in front of them with the auto sector and electric vehicles, and the amount of demand for electric semiconductors or electric components for semiconductors in cars. Okay, and then Marvell Technology, that's our 5G and enterprise exposure with a forward P of 18. I don't recall Marvell ever being at a forward P of 18. So this is the one that we've been adding more heavily than the others. So I would say Marvell is 1, AMD is 2, and NXP is number 3 as far as what we're focused on, our primary focus on the market. Okay, and then our secondary focus, of course, our other portfolios opportunities starts with Disney. And Disney, of course, the only problem with Disney is their balance sheet. Their balance sheet got wrecked with their acquisition of Fox, or Fox Entertainment, whatever you want to call it, and they overpaid for it. But at the same time, they have Disney Plus, which is scheduled to be cash flow positive in 2023. We'll see about that. And then moving on to Ford. Ford, we love this. This is one of the cheapest stocks in the entire stock market. Is Ford. They have a great growth plan. They're paying a 3.5% dividend at the moment. I don't think you can go wrong with buying Ford stock at these levels. And even if it goes lower, then whatever. I think it's time to buy some more. And then Planet 13 at $1.10, $1.20 a share. I think that's just a bargain. These guys are already well established as a premier destination in Vegas, establishing California and expansion into Florida. I think there's no question that it's a smoking deal if you're in the MJ stocks and you like the MJ stocks. This one, I'm pretty patient with this one. This one, I'm not in any hurry whatsoever to add. If I have a couple bucks left over after buying some Marvell and NXP, I can throw it here, right? Or maybe it's some Honest, because the share price is so low. So it's really easy to add to these positions. And then the third priority for me and our portfolio is Meta, Nvidia, and Dutch Bros. These are kind of like new position opportunities. I'm so overstretched in my portfolio with 15 positions that I find it hard to add to any of these, even though they're amazing opportunities at the moment, in my opinion. Because if I add Meta, it's another position that I have in my portfolio, and I can't add Disney, I can't add Ford, I can't add AMD, NXP, Marvell if I'm adding Meta. So I have to kind of pick and choose my battles and how I manage my portfolio. But if you do not have a position and you're looking to start new positions in your portfolio, these guys are it, right? Meta is trading at a forward P of 12, 13 at the moment with a 50 billion share buyback in a resurging kind of use of the Reels feature on Instagram. Also, the metaverse, you're getting it for free. You're not paying for anything metaverse at the current share price, 160, 170, whatever it's at, you're not paying for the metaverse at all, because that story really hasn't developed. It's still in very early stages. And then Nvidia still trades at a premium. I believe it's about a forward P of about 33. Let's check out Nvidia real quick. Let me see what the valuation is here. Oh, what do you know here? Actually, forward P of 26. Actually, quite cheap for Nvidia. I don't think I've ever seen Nvidia at a forward P of 26. I mean, if you guys look here, 33, 47, in 2021, 54, 50, 43. So yeah, this is a stock that usually commands a very high premium. And at this price, I don't see a reason not to start a position, or maybe just a small position to get going and just dollar cost average down. If you're looking for a great omniverse and a semiconductor, graphics, high performance computing exposure, Nvidia would be great for you. And of course, last but not least, we have Dutch Bros. This is a position that I just recently traded. I made about maybe $1,000, $1,200 on it, and I bought some more semiconductors with those profits taken from Dutch Bros. Dutch Bros is very volatile, so I thought it may be a good idea just to take some profits now. It was a 50% profit and profits are hard to come by in this market, so I thought it's probably prudent to take a profit there. I think this is a good add at about maybe under $28 a share. That would be a good addition to start a position and dollar cost average down. If I were to buy Dutch Bros again, I hope that it keeps going down. I hope that it goes under 20 to add a significant position there, but not really overly focused on Dutch Bros at the moment. I probably go Meta 1, Nvidia 2, Dutch Bros 3 as far as new position priorities. Okay, now to wrap it up, we got earnings season next week, of course. And just as a reminder, if you follow me, you know what we do for earnings season, okay? Banks go first. They set the tone. Hopefully we'll hear a lot about what's going on with their deposits and making money from deposits. Interest rates are higher, so they should be doing better. But at the same time, they have a lot of bond exposure, so who knows how that's going to work out. We're going to listen to we're going to go to the investor relations site. We're going to view their quarterly reports once they report earnings. Of course, we're scheduling earnings. We know where our companies are reporting earnings each day, each week, okay? And we're going to listen to the conference calls. Listening for the guidance is going to be probably one of the most important things this earnings season, not what they're reporting now, because I think there's a lot of bad expected in these reports. And I wouldn't be surprised if we get companies that report bad numbers and the stocks do not go down on those bad numbers. I wouldn't be surprised at all because of how beat up they've been. So you're going to listen, or you should listen, in my opinion, to the guidance that's being reported to see if the guidance is maintained or even increased. And that would show a vote of confidence by management in a company that things are going to go better and the worst is behind them. Hopefully you get a couple of companies that report something close to that, all right? And then we're going to read the 10Q report. That's a quarterly report that shows all the balance sheets and everything that they're talking about for the second quarter. We're going to watch for mentions of slowdowns, but we're going to keep an eye out for companies that are buying back their stocks, kind of like a rocket companies, and keeping a healthy balance sheet, sort of like an AMD and the other semiconductor stocks we have, okay? Expect bad things always, okay? When we're in this environment, just expect bad, and you won't be disappointed, okay? And pounce when it makes sense. When a stock gets oversold, especially a stock that's already oversold on a weekly basis, or actually oversold on a yearly basis, and then again oversold on a weekly and monthly basis, it may be time to pounce when you see these forward ratios, sort of like in these semiconductor names that have been happening lately, okay? Now, that's going to be all for tonight. If you guys have any questions, please reach out to me on Instagram, Twitter, whatever I could do to help you. I'd be more than happy to help you right now, in the future, whenever you need it. Feel free to drop me questions. Peace out.